I've had terrible losing periods in my trading career. Like in 2020, I don't know if you know, but I went through a really weird time in trading, and some people that are maybe watching, they probably remember too. 2020, before the pandemic, before the market tanked, I don't know if you were watching the market around that time, I shorted the market, right? So when I shorted the market, I publicly shorted it. Hey guys, I'm in $500,000, right? So I was in a $500,000 position. In March of 2020, that position went up to like 900K. Like overall, I was up like 400K. But long story short, I lost all the 500K. Wow. And I like essentially doubled down on my thought process and on my position. And I did it publicly. So you can imagine when publicly you do something on YouTube, on Instagram, on Twitter, yada, yada, yada. And you're telling people, I'm not saying, hey, I'm not showing people my trades after. I'm saying, hey, I'm taking this trade here at this level with this much money. So when that flips, that big loss now becomes like detrimental to you. Because now it's not only that you lost money, you also
it's like public shaming, you know.
People go, oh my God, this guy sucks. He doesn't know how to, and you know, mentally that gets to you, and it got to me. But from there, I learned the most valuable lesson, like so many valuable lessons from that period of not allowing outside noise to, you know, alter my ego. Because I could have cut that position, but because so many people were like, I'm wrong, I was like, no, I'm right. So I went more. So there was a lot of small things that I did wrong because of outside perception. My risk was massive. My ego came in, and it just kind of ultimately destroyed me at that point. So it's like, yes, at that current window of a period, it was a loss. Year after 2020, 2021, I had my biggest trading year, $7.5 million. Right. So that came from that loss of preparation and me going through that and being ready to take bigger positions, being ready to take bigger size in trades, and just the comfortability of other positions.
In terms of stocks, because I'm interested, because I've never really looked on I came into trading doing Forex. Literally straight into Forex.
Straight Forex.
Stayed into Forex. That was it. So I've never looked at options.
Is that more, just curious, is that more of a UK thing?
This is what a lot of people say. I think it is. I think we're less exposed to the stock side and the option side for sure. I think there are probably people out there. There might be people.
I know there are. It's not that, but I from what I've seen, the majority of people.
I think social media. That would be my opinion. I think the rise of social media, and then as we talked about previously about the being able to leverage lifestyle marketing alongside the leverage, and the entry level then, and the opportunity of using the leverage to then be able to flip an account and then be your whole life sorted. Maybe that was part of it. Maybe there's a company called IML, which is like...
that's what pushed me away from Forex.
Yeah.
When I saw that, I was like, yeah.
I think the rise of that as well, because then they get into the sort of like, the teenagers, if you will, like the early 20s as well, do business and trading, I think these things kind of excelled Forex side of things.
Got it.
But yeah, for me, I came into it, to be fair, I came in 2016. So it was just when people were starting to get onto social media. Right, there's only two main companies at the time, and I learned from one of them, then the other. So I just always stayed in Forex. So like again, a lot of my audience is Forex related as well. So that's why I just wanted to ask you about the stock side of things. Can you tell us a little bit just about maybe basics? Because I would imagine stocks, if I heard it, you could just buy a stock.
Correct.
Right? Can you sell a stock?
Yeah, you can buy and sell. So you can short a stock. You
can
go on the downside. But I don't just trade stocks. I trade stocks, options, and futures. Right. So
did you start with doing?
I started with stocks, then I got into options and futures. Right. So I see you guys trade US 30. Right. Yeah. Same thing as like trading this S&P 500. Right. It's trading SPY. Like I trade SPY. So it's like the movements are the same. The price action's the same. The instruments may be different. The leverage is different.
Yes.
But what you're seeing and what I'm seeing is essentially the same thing, especially on that, right? The way the trading is done in both worlds are relatively similar depending on your trading style.
Yeah.
But in stocks, like if you're trading stocks, you can buy it, you can short it depending on the stock. The leverage isn't the same. Like if you're trading stocks, like let's say Apple, you need a lot of money to go and buy 100 shares of Apple to make a good amount of money. That's why a lot of people go into options. So for options, you can essentially trade the underlying instrument. So example, if I'm trading stocks, and let's say I have Apple, Apple, Tesla, Nvidia, Amazon, even SPY, the S&P 500, they all have options.
Okay.
Right? Options have expiration dates. Usually they expire on Fridays. Some options have same day expirations like SPY, right? So let's say today's Monday and I'm trading Apple. I can buy an option contract, call or put, meaning I'm making an assumption, will the stock go higher or lower by the end of the day? And I can sell the option before the end of the day. So let's just say Apple right now is at $180 and I buy a call. I'm making the assumption that Apple stock will go higher.
Okay.
So if Apple stock goes from 180 to 180.5, the option contract will increase in value. So the option contract may be $2, right? And for 100, it's going to be $200 per contract. That'll go from 200 to maybe 300 or 400, depending on the expiration, depending on the strike and all these other factors. So you're able to make a bigger return percentage-wise off the same move on the stock.
Okay.
So that's what happened in 2020. We got like an influx of people, influx of retail traders just trading options, and some people made good money and some people blew a lot of accounts.
Of course.
Yeah.
No, definitely.